So you're saying 3.1%, the Christmas period becomes at a very opportune time for the Reserve Bank. It gets a month off in January, and unlike other central banks, it does meet otherwise every month of the year. So it really does get plenty of opportunities to have a go. So it can tweak if it needs to. It can take a rest for a while and just see it all flow through. But of course, it depends on the urgency and I guess the next print of inflation when they start to come through.
That's right, that's true, and certainly the inflation numbers are something we need to watch really carefully. And I might add, by the way, we've of course got a monthly indicator now that the Bureau of Statistics is publishing, so we won't necessarily be entirely beholden to waiting to those quarterly prints. We'll actually get a print at the end of each month ahead of the RBA meeting, and that'll be helpful. But my view is that actually, in some ways, to work out the RBA's next move, the pathway for the cash rate and when they might decide to pause, we're now going to start focusing more on the labour market. The inflation numbers are high, they are, but they are likely to be near their peak and they will come down. And for me, the next thing that will make the RBA sort of decide that it doesn't need to lift interest rates further is once we see the unemployment rate start to lift, once that's troughed, once the unemployment rate rises. And if you think about it a little bit more, they've lifted interest rates a lot, the housing market is cooling, the economy will slow down as a consequence of that in our view. The global economy is slowing down and that'll have a reverberating effect through the domestic labour market as well. And then on the other side of the equation, well, the border has reopened. We are starting to see a flow in of workers from offshore. So by the time we land in the early part of next year, our view is the labour market will have lost momentum. It will be softening up. The unemployment rate will be starting to rise. And at that point, we think the RBA will pause because we don't think they'll want to be lifting interest rates if the unemployment rate is on an upward trajectory. Even if inflation is high, as long as it's heading in the right direction, they might be satisfied to sit still.
Just one issue there, though, is the consumer and consumer behaviour. We talked about house prices, and there's a lot of build-up of savings and equity in people's homes over the past couple of years. Now, the Reserve Bank today, and this comes off the back of retail sales, continuing to be strong, 9 months of record retail sales. It says today, effectively, that strong domestic demand relative to the ability of the economy to meet that demand is also playing a role. Returning inflation to target requires a more sustainable balance between demand and supply. So in many ways, this also comes down to consumer spending and the consumer's resilience to absorb these rate rises.
That's right. And so far, you're right. We've seen not that much evidence that the consumer's pulling back. But I might point out that the retail numbers we got earlier this week, yesterday, were a little on the softer side, because you've got to keep in mind all these retail figures we're keeping track of, the ones that are published, are nominal figures. They include the price impact as well. Inflation's running at a decent clip. Actually, in New South Wales and Victoria, it would be reasonable to think that retail volumes have really started to stagnate, started to slow down. There are telltale signs that the interest rate rises we've seen are starting to feed through to both, obviously, a cooling housing market. House prices are down nationally by 6.5%, 7%. But also, in addition to a cooling housing market, that they are starting to impinge upon the consumer to a degree. And it's early days, that's the point. They've just lifted interest rates really aggressively, really rapidly, and just recently. So over the next few months, I think we will see more clearer signs that the consumer is pulling back. And by the time we get to the early part of next year, that will be something that plays into the RBA's decision-making, I think.
Paul Bloxham, always great to have you on the program. Many thanks for your input today on an important day for the Reserve Bank.
Thank you.